Okay, what's going on, guys? Good evening. It's not grand rising, it's good evening. I'm just so used to doing streams in the morning. Um, what I'm going to be going over here really quickly is just going to be what we call a DRC, right? So a daily recap. Um, just answering a couple questions, right? So a couple of those questions, one of them will be, where did I improve today, right? Which today was pretty rough because of how they presented the opportunity in the second half of the day, which is when we're not really looking for those type of setups. And then, so that's number one. And so number two will be, what did I learn today, right? So I'll kind of take you guys when I bring up the charts over some things that I learned today. This is more for me as well. Like I'm just putting it out there online, but it's more for myself to, continuously do these DRCs. So number one is where I improved upon today. Number two is going to be what did I learn today? Number three is what are some changes I need to make for tomorrow? And then number four is just an overall, what happened today, kind of how I played it, how others played it, and maybe how I should have played it. Okay. So that's kind of what I'm going to go over here really quickly. I'm going to go ahead and share my screen. Just off the top, some things that I learned today was the same thing we talked about in the last video, which was, don't force opportunities, right? Your time window, there's going to be plenty of time to take the setup to find, um, trades that are in your plan. And you're just going to have to let those come to you instead of, forcing them. And then just changes that I need to make today were just really come down to, let's see here. Just really, this is the main one was just identifying a draw on liquidity, right? Just really wanting to see a draw on liquidity. So I'll take you guys through really quickly here what I see personally today when it comes to NQ. I'm not going to go over all three of them, but I'll kind of run you guys through what we were wanting to see from the beginning. Okay. So really quickly here, what you guys see here is I like to mark what's called point of interest. So New York opens, London opens, daily opens, etc. And what we've seen here at New York, just kind of give you guys an example. I'm going to jump down into yeah. Let's stick here first, actually. So when you first seen the open of the market, right, in the 22,750 area, you have market open here. Okay, you have market open right here, which was making a new high. So you have a lot of players from overnight that are, long in positions, probably from in here, and then on the breakout, I'm sure the 22,800 or 22,820s was probably another area where they wanted to extend up to this area here. And so overnight, we had already had a high created. So when you come into the price and you look at the 1 hour, I like to look at the market around 7 a.m. and start to get an idea. This is what we could pretty much see when it comes to coming into the market. We were making higher highs, higher lows, higher highs, higher lows, and just continuously rallying up to potentially go and make another new high, right? And so then, if you guys can see right here, this was 6 a.m. going into the 7 a.m. close. We start to fall off, right, into 8:30. So that's what we were seeing as we were doing our pre-snap reads. And then when you jump out of that window, uh, you can see that obviously price sold back down, right, into this area. This is 8 to 9 right here. So this is what we're going to break down here is this New York open time. And then I want you guys to focus on that 22,800 level because if you were long from market open, like in this area here, let's say essentially, most likely when you think about trailing risk, right, you're going to trail your risk to this area here, right? So to secure the back. Now, if you also waited until price made a new high, right? So it did this here, comes up and makes a new high, and you waited for like something like this in this area to play buys and put your risk here and to attack higher, like overnight. Then most likely you're stuck here, and then there's people could be stuck in that imbalance, et cetera, right? So that's what we were looking at as we come into this session. Then you have 15 and 5, just to kind of really start to break it down. Right, I'm going to move some of these out of the way, move this out of the way. And we'll look at just this price over here. So at New York Open, as you guys can see here, all right, this was the New York Open, this 5 minute, 15-minute candle. So basically, if you're looking at a 15-minute from 8:30 to 8:45 right here, that's what we got. Right, from 8:30 to 8:35, right? That was the candle that we got. All right, so what I like to identify when I'm writing all my stuff out is here, as you guys can kind of see, right? Okay, cool. So like in here on this side here, I'm marking like I'm giving myself a grade based off timing. All right. So uh one thing I could see when, as soon as we opened up was a lot of people were trapped, right? Because everybody was just trying to make a decision. And so how others traded it, right? I believe people sold that down. And what I believe, right, is what happens is people don't get this sell here, right? They're not shorting the position here. They're usually selling at the breakout and they're getting their locations going to be somewhere like this and here. And so I think a lot of people were trapped on that New York short. And I didn't take the New York short. I waited for what's called a capitulation bounce play. All right. And so what I wanted to see was price actually come a little bit lower, maybe even, than what it did here and kind of dig a little bit farther into market open and then reaccumulate, then do something like that. But instead, what they did was they came down, they fell here to 45, and then they started going sideways right here. Right. So you think about price and time, right? So right here, when I said it started going sideways, it's 8:30 to 8:45. This is 8:45 to 8:45 to 9, this candle here. And this is going to be 9 to 9:15. So as you can see, when you start to evaluate that on a 5 minute time frame, we started to get 5 minute demand play, right? Capitulation bounce play is when the New York sells off, but eventually those New York shorts, they need to cover that position, right? And so that's what I like to identify and see. And usually see a 50% bounce play back up, or at least a bounce play back up to the point of interest, or like you got later on in the day, a rally of the New York high in HOD. All right. So as soon as we came down, this was about, and I'm going to jump down now here in a second to a little bit smaller time frame. But as soon as we came down into the 8:45 and the 8:50 candle, we made this low. Now, a lot of traders, this is where we talk about the RSV and how to play it. But a lot of traders at this point, they're just hacking away at buys, right? Lower low, lower high. They're just hacking away and they're just kind of guessing, not really realizing that we could, slip down to 22,700 or even lower. And so they're hacking away. So what do we wait for, right? We wait for the first 15 minutes of an hour and the last 15 minutes of an hour to make our executions, right? And so right here, what you're seeing was the first sign of strength, 850 to 855. Now, for me, when I know, just think about this, okay? When I know shorts sold a position here, the only way for them to make money is how, right? The only way for them to make money is for them to cover their position with a buy limit or a buy order, right? Impulsively, or they have a limit set. All right. So when I know this and I missed the New York short, right, and I'm looking for a position, all I'm looking for is that first sign of strength on a 5 minute, and then the next candle that basically prints here. So it's going to be like this candle here that prints. At this point here, I'm already looking on a 5 minute, excuse me, on a 1 minute to get in this trade. So let's just go break it down a little bit farther, okay? Let's go 5 minute on this side. This is the candle we're looking at. And then we're going to go 1 minute on this side so we can get an idea of what it really looked like. Okay. Okay. So replay mode. And the 5 minutes on the left now, and the 1 minute's here on the right. So it's kind of showing you guys how it would have looked. So in this first 5 minute candle, 850 to 855, that's what we're going to study is that price here. So this is 852, 853. The next candle will be 854, and then 855, right? So what I like to see, right, when I play a capitulation bounce play and I see shorts cover, is I like to see that play as soon as it, hits, right, and decides to make that low and we decide to enter, and I'm going to show you guys how. I like to see that play bounce back to support or back to the point of interest, New York Open or the high of New York. That's kind of like my typical areas that I'm looking to see that bounce back up to at minimum. All right. So in this situation right here, I like to take 15 and 5 minute positions. And so when this 5 minute starts showing signs of strength, as soon as this 55 to 9 candle would have opened, right, this is where I would have personally been taking positions, right? So let's say here, for example, I like to take two contracts in this situation, right? Buy two here, stop loss goes at the low of the market, right? And then I would be targeting the New York Open area, right? Or that HOD, or excuse me, that New York Open high, right? So this was the highs in New York, like right here, but then that would have been the highs that were like right before previous. So this is kind of like the trade that I was looking for. It was about a 1 to 3, right? About $100 risk in this situation for 3 times the 5 counts, right? So this is kind of what I was framing up. And then once we ended up moving those 50 handles, points, right? Handles means points. When we moved those 50 handles up, you had to start basically protecting that position. So situation here, I don't personally watch a 1 minute to do trades. I like to watch a 5 minute and a 5 minute or a 15 minute and a five, but we can keep it on here for this purpose. Price started to move in our favor, right? So we're looking at 855 into 9, right? So let's go 855 into 9. And so that's what we're seeing here. Price is starting to extend. Price is just accumulating in this area essentially. And now you're getting higher high, higher low, higher high, higher low, higher high, right? Out of the area, right? Small time price action. And then what all I'm looking for here is just a break higher than this 5 minute candle, 22,833s, and pretty much this 1 minute structure, 22,843s, right? It's because at that moment, right, the market from my entry has given me down candles in an uptrending market to where I can at least trail the risk off and protect myself or start to scale into the trade. All right, so this would have been 904. This is 905. All right, so price is still kind of just building, and now we're into a new 5 minute candle. All right, so price comes back down on the order. So like I said, I don't play on the 1 minute because this is exactly the type of stuff that happens, and you just have to trust that 15.5 area for me personally. But I still will see and watch this price. Okay, so now what am I waiting for? Still waiting for those 840s to break. All right, they're still building bullish price action here, new highs right there. Boom, right? Now that was exactly what I'm looking for at this exact moment on a 1 minute, and I'm looking at a 5 minute setup. Right, I'm going to be personally looking at this because I break my trade into twos every time. I'm going to go break even on one of here and then start to trail this one up on the breakout trade. Right, that's what I like to do personally. That's what I was doing today because I was wanting to see just a push right back into, like I said, that support 22,860 or into that New York Open, which would have only been, pretty much getting from here, right, this area 22,815, let's say, like right here up to here is about a 60 handle move, right? And then getting into that supply area is like a 70 handle move, and then taking that just, that structure right there, just that little liquidity like that would have been about an 86 to 90 handle move. So that's something that we typically see in a New York Open trade. Okay. So that's what we were seeing. That's how I was managing the very first part because you really can't, in those first 5 minute pushes when you're getting that capitulation bounce, you're most likely going to get pullbacks and test into the area that test the late trader, that test the individual who's, you know what I mean, they're not inside accumulation or demand or et cetera. Right. So that's pretty much what we were looking at today and how we started to play that up. And so I'll go back to 5 minute here in 15. And so let's go into it now here. Okay. So actually, let's go back to 5 here in 1 minute here. And we'll go back to this area here. So I want to talk about the next area that we were adding in and playing, and then the area that we were already out of the markets and what I believe there's no way you got that trade unless you lost like 5 trades. Okay. So let's go back to this 1 minute here. We've already talked about how we were looking at the entry here. So another thing is plot your entries on a 15.5 so you can kind of see what it looks like on a 1 minute. Right. A lot of people take 1 minute trades, but it's like I get better 1 minute entries by taking 15.5 minute location setups. All right. So seeing that was a good area. Price rallies up. And then most likely the individual doesn't trail their risk, doesn't, get to the bag after the 60, 70 handle move. And what does price do? It slow corrects. So you have the fall off, the push higher, and then the slow correct back down, right? Right back into what? The demand candle, right? Whatever you want to call it. But to me, on a 5 minute, when we cross higher like that and we close, that automatically sets demand to where I'll play back up to 50% of the previous range. This is how I play. Okay. And so the other thing was now when you go over and study the small time price action and what time this actually occurred. So at what time did this when you're looking at this down candle here, get to this level right here, let's go study, right? I like to take trades in the first 15 or last 15 minutes of an hour, right? This trade actually came down and drew on this internal liquidity right here around 11:14 and 11:15, bam, it draws on that liquidity and pushes down, right? So most likely I'm not taking a trade on a 1 minute setup. I like to see buyers step into the marketplace. So instead, 1020 to 1025, you see the 5 minute shift, right, out of that demand area. And then you get a push back down into this area. Now, this is a little bit more advanced, right? That's why I said it's harder to see to me on a 1 minute, but a lot easier for me to see on a 15 and 5. Okay. And so as we push into this price here, right, and we come in, we make that first shift. So this is what I want you guys to focus on, is what I'm focused on, right? Is out of this area, it would have looked like this essentially. All right. You got that push away inside that demand area. As soon as that's happening, guys, like right here on a 5 minute play, I'm coming in and I'm framing up edge, right? Because it's failing to break the 22,800 level and it's failing to give those shorts, right, the objective low so that they can take profits or so that they can trail risk, etc. Right. And so as soon as this happens, I'm looking at this 5 minute area. But if you want to be very tight and keep it, very, tight, you could risk right here about 15 points, getting right above that wick high. You're always looking for a 1 to 2 or 1 to 3 probability setup to where you can start trailing risk off. And I was seeing that if I was aiming for, at least New York Open, I was looking at least a 1 to 3, right? And so that was the idea. And then if we can get there, great. If we can just get above this wick, then we're at least doing at least 2 times what we're risking in this situation potentially here, right? And so price would have come down like this, right? And it's coming down into the area. So cool. We buy two, put our stop loss at that low, like we're explaining right here. TP could have been right here for, like I said, about a 1 to 2, 1 to 3, almost setup R, right? So let's just go ahead and move it to a 1 to 3 R. Oops. All right, so that'd be like a 1 to 3 R setup right there. And then, like I said, you got people, if you're watching Rich Retail like I was, you got people that are, just capitulating in their emotions and mindset right here. They're not understanding order flow and how things work and that these shorts need to cover. And so from that moment right here, you get the 1025 candle into 1030 and then 1030 into 1035. Bam, right? Big shoot up. So look at the 34 candle here, right? And then when I go like this, that's the next candle, 35, right? When I go over from 34 to 35, that's how this shifts in the 5 minute candle. So it actually ends in the 34th minute. So like right here, this looks really good. And we're looking for that same thing, the break of 22,840s, 850s. And we're essentially what I'm looking for is a technical break, right, out of the area so that I can cover the position completely. And so we started to get that type of break, right? Price started to rally up, hit that 22,850 area, right? And that's what we're seeing right here on the 1 minute in this area here, right? And then we ended up going for bam, take profit, right? So that take profit, that previous area of support, because like to me, this is how I've always learned to see it, is that this is a previous area that people were seeing as support. They were buying this area that turns to resistance, good area to exit, right? And so for me, that was why I was looking at that area, as well as I'm very technical when it comes to Fibonacci retracement. And so when I looked at that previous high, New York Opens high to the current low of day, we were well above the 50 and closing higher than the 50. And then we started to push into that 71%. So it's just like, that's a beautiful area to exit or to start trailing risk up into here, right? So you have price broke out of the area, you can start to trail your risk up to this low here to secure, as you're moving to the highs. And so that's how I played that position and closed down a partial trailed risk at this point. And then, as you guys know, we came into, so I'll bring this up here really quick. We came into the, after we made that high and you partialed out of that position, we came down and kind of started to sell off. I still held my position. And then price came up and never right here on a 5 minute, never made a new high, right? Never came up and made a new high. It actually came and made a lower high on the body closures and broke back down and ended up selling off, which I believe, like I said, 1255. If you were still trading at 1255, kudos to you. But 1255 at this point, this is the most disgusting candle right here that you ever want to experience, is the candle that lightsabers, right? It just wrecks the highs, wrecks the lows, right? And then does the move of the day, right? So I can be content with, attempting when the capitulation bounced. So when the shorts had to cover, I'm content with trying to play that play here, coming back, knocking me out for a small win, right? Then coming back here, playing the same level, being able to partial for a good amount, and then leaving my risk on the LOD for a small loss, which ended up still bouncing out for a good amount. And then being able to identify, like, I wasn't in the markets at 1255, but to be able to see how bad that was for individuals, right? And there's no way, if you caught this buy, like I said, you probably lost 3 to 5 trades just getting this trade, right? So just remember, it's a short week. Yeah, NFP week, I believe. We have July 4th on Friday. We have a close day at 12 for Thursday, right? And so there's news each day, pre-New York and New York, going into those days. So it's going to be jam-packed with a lot of news. So I hope this kind of helped understand like the capitulation bounce, New York short, they got a cover. We found the cover. We thought we could get the push. They ended up giving what we wanted later in the day, but we just didn't get that during the time that we're looking, so before lunchtime. And then just to kind of leave you guys with what I think could be going forward here, we will look at a higher time frame. But going forward, obviously let me see how this looks. We are at all-time highs. We had a daily close yesterday that was really good. Our 4 hours still look really good. So until those buyers really, to me, decide to take profit, then I think we're still going to continue going higher. And then the other thing was when I'm watching New York, the SPY and QQQ, they sold off, but they had gapped up. So they gapped up, took new highs, and then they had basically set a new level here, the 550s, right? And now they're starting to close stronger. So that'll be interesting as well for tomorrow. And then if you look at just the overall market today, I liked the 1 hours, how they all looked at some point. Let me move this here. Especially ES and NQ, right? Because, YM, obviously we never could go back below market open, buys below market open, no wick candle on the 1 hour here, and then it rallies back to HOD. And then to finish NQ, I wanted to go over that, how it finished at the end of the day here. And then for them to finish the end of the day, like I said, by drawing that liquidity on those individuals here. And then, so yeah, right here, 140 to 145, they drew on those lows. Then you had a nice signal that we like to look for here at the 22,800 level. And then boom, just rally right up to this liquidity, 22,860, where it was just, I felt like it was, trash shorts anyway, right below New York Open. If they would have been like right at it, that would have been a lot better to me. But just because it was below it, it felt like it was so trash. So you get in the next, what was that? The next 2 hour, or the next 30 minutes. So this was from 145 to 2, and then from 2 to 215, right? You had a burst from 600 to 850 to about an 80 handle move, right? And so from that point on, I was like, okay, cool. They're gonna, they've got their eyes fixated, going into like, what is this, 2 o'clock here? Power hour starts right here when they're already at 22,850. I'm like, they're going for the New York high, right? And if they go for the New York high, I'm like, what's going to stop them from taking the new high in HOD and all-time highs, right? And so going into tomorrow, this is something I like to do personally, is I like to look at the liquidity areas. So previous day high is going to be our all-time high as well. We'll move this to 1,700 hours. So let's go ahead and do this stuff right now. I'll give you an idea of what I do overnight. 1,700 hours. I'm going to move these really quick. And these are previous day lows. All right. I'm going to move this. Okay. So we got previous day lows, right? And then we've got the end of day for tomorrow. We've got the previous day high, which is also the all-time high, right? So 22,934. And we have everything looking pretty bullish. Now, news can be the excuse to push price to where it's going to hurt traders. So now what I would say is, think about this. If you were playing on a higher time frame, buying on the weekly, buying low on the weekly would be considered a great buy, right? So if price was to capitulate and fall at any moment, below weekly open, inside demand, it makes sense to, if the right timing, if it's in your time window when you trade, to see possibly mitigation to rally back up to go take all-time highs again. All right. So I'm not a fortune teller, and I don't like to predict anything. I like to just, see my edge and then play my edge. So I hope that helps you guys with the 15.5 and just the continuation, and just understand that today was definitely pretty choppy. And if you definitely have to have edge in a market like this. Otherwise, you're going to take a lot of emotional damage to your account. So today wasn't the best day for me, but also it wasn't like crazy bad or anything because of the fact that, I have an understanding of, how to stay pretty locked in when it gets a little crazy. So, with that being said, I will be back on again. This is, like I said, the DRC, and just to kind of answer some of the questions, like I said, we'll go more in depth in those and like what we improved upon and things that we learned today. But most of the things I learned today was just, staying focused on, my entry tactics and the changes I need to make for tomorrow is just probably sizing down and being focused on, we have a short week and just getting A to B setups, right? Base hits, you don't have to always hit home runs. So we'll look at dollar here really quick. Or we'll leave it NQ because there's really not much more that you can really decide that what can happen. Let me check over the 4 hour here. Yeah, there's not really that much until tomorrow morning in our pre-snap read. So let's see here. So yeah, so let's see. Let's look at Forex Factor here though before we leave. See what time that news is tomorrow. Okay, so tomorrow is Tuesday. So we have 8:30 the news, right? So that's gonna be red folders, and then we have 9 a.m. So yeah, just definitely be safe and just remember that we're just trying to get those base hits. So I appreciate you guys. I hope if there's anything I can do to make these better, any kind of questions you guys have about the charts or anything like that, just DM me on Instagram for now. And I'll be looking or be on the lookout for those to make changes and just do different things. So there will be a sheet that I'll drop in my Telegram that goes over the terminology and lingo. So like when I'm talking about like HOD, LOD, so high of day, low of day, PDLs, previous day highs and lows, stuff like that. I'll drop that in my Telegram, so just be on the lookout for that. But you guys trade safe, and I'll see you guys later this week for some live trading.